Jose Rasco, we got fourth quarter GDP growth of 1%. So does that reassure you somewhat that we're not going to get a recession in 2016?
Yeah, we maintain our base case that we won't. We see growth of about 2 to 2.25, and not just GDP. Look at durable goods orders. Look at retail sales. We've seen some good numbers in the U.S. economy. They've been mixed, but we've seen some good numbers that reassure us we probably won't be in recession this year.
We've also been getting higher inflation numbers. I guess this could give the Fed some reassurance, better wage growth numbers, more inflation in general. So that reassure you as well?
Yeah, I think if you look at inflation, especially as we head into the spring, our economics team thinks we could see a slight buildup in inflation numbers. Base effect because of last year we've had falling prices. Secondly, owner's equivalent rent is starting to take off, which is traditionally a good thing because if rents are going up, that means housing demand will probably follow. We don't expect it to boom, but it should be up, which is a positive for the economy on multiple levels.
Yes, I guess inflation is a positive now.
Yeah, for now.
All that said, credit spreads are getting wider. Still worries about junk bonds getting junkier, not just in the energy sector. What's your view?
Well, you know, we're concerned about some credit issues in many places, emerging markets in the energy sector in particular that you mentioned. And the energy sector may take a little longer to work out due to prices and the make-whole provisions in some of these instruments. But on the end of the day, it's all about energy prices going up or stabilizing, and that's going to take a while. Yeah, but we're not worried about credit, no.
All right, so are you worried about the Fed? Maybe because we're getting some better numbers than expected that they may hike rates 2 or 3 times this year? A lot of people were saying maybe just 1.
Well, you know, our economist thinks another 1 or 2, that's about it. He's stayed at that number, and I think that's pretty conservative. You know, we're looking at the data now when it's mixed. When we get to the spring, if we get an improvement in housing starts, if we get a little more inflation data and auto sales still look good, we saw some good investment numbers in durable goods, 1 or 2 rate hikes may be all they can do this year, but it could be the way to go. Yeah.
And what about the whipsawing we've been getting from Chinese markets? I mean, their markets have been going up 5%, down 5%. What about that impact on our markets?
Well, I think if you look at the
Fed, excuse me.
And and that's exactly right. The Fed is now looking at markets overseas. They've been doing it for quite a while. The good news is we're seeing that policy response from China. We got leaks this morning, not leaks, but announcements this morning of some improved activity on the monetary policy side. National People's Congress starts March 5th. We're expecting a major fiscal policy response from them there. More monetary policy, some stability in that economy. We see signs of potential upside to growth, not dramatic, just stability and growth, and that's going to be the key for us. That could provide the floor for commodities and hopefully emerging markets at some point later in the year.
All right, the Fed's watching the data, you're watching the data, you're watching the Fed. What should individual investors be watching right now, and how should they allocate their assets as they watch them?
Well, you know, like you talked about credit spreads and issues in the credit markets. So we see opportunities in the credit markets, but our concerns there are not dramatic, but we remain focused on equities where we think income investing in safe, secure, blue chips that provide a good dividend yield, give a good return to investors in terms of share buybacks, or are you going to see a lot of M&A in the business sector this year? We think that'll continue to help move markets forward as we go through the year. So that's really our focus is still in the equity markets for the most part.
All right, well, thanks a lot, Jose.
Thank you.
And thank you for watching The Street.